Hey guys, it's Casey and welcome back to the channel. So today I want to talk to you all about the SP 500. I want to talk to you guys about the direction of the stock market today, and I want to discuss with you guys two stocks that have really had a lot of price action today, one because of earnings and one over speculative play. I want to talk to you all about how to play those two stocks from a day trading, from an investing standpoint, and I want to talk to you about the overall direction of the stock market and where I think we're headed. So let's jump into this. Now, regarding the SPY, I already have that up on the chart right now. As you guys can see, we have been in a sideways consolidation pattern for almost a month now. As you can take a look here, we're in this 323 level down to the $300 level, and it's just been pretty much just up and down, up and down, up and down. We're now retesting the 300 level, and at this point we're either going to break out or we're going to come back and retest the 300 level. Now, keep in mind, with the stock market, it prides itself on being keeping you on your toes, being, I don't want to say deceptive, but there's always a lot of mixed signals a lot of times. So you have to be careful to not be too overly biased so that you don't get caught one direction and then you get kind of caught and then you don't know what to do. So from a direction standpoint, we are obviously still on an uptrend. The market is actually looking as though that it wants to start to go sideways. Now everyone is starting to see, or should say starting to feel as though we're going to have this breakout of this. I personally think that we're going to probably come back down and have another retest at 300, maybe have some more sideways action, who knows, until the presidential elections. Right now, a lot of this is just pretty much all Fed based and presidential election based. And I say that because, one, this is when the Federal Reserve started injecting a lot of cash. Earnings were awful, no one cared, and the stock market just shot up. And here we are. So everybody's been calling for a V-recovery. No one saw this coming. No one, unless you were on the inside, you had some inside knowledge, I don't know. And maybe you bought down here just from an investment, but no one certainly thought they were going to hit even close to a V-recovery. And here we are. And right now, I think that, it's hitting this resistance level. We were down today, not really much, down a little bit more after hours. We may very well see this level here in the next couple of days and then push through and get back to get an official V recovery to the 339 levels. But the reason, I should say, one of the things I want to really go over that's going to be a big indicator of this is technology. So although the SPY is up a lot, one of the things that's up even more is tech. If you guys know anything about the stock market, you know that technology, the tech sector, is always the leading sector in almost every bull market. It just is. Every recovery, it's one of the leading sectors, and that's just because our country leads a lot with tech. Right? So the big behemoths in the S&P, the Apples, the Facebook, the Amazons, the Microsofts, right? They make up like almost 20% of the entire S&P. So as tech goes, the market goes. And so the reason that I bring that up is because if you take a look, and I don't want to use Apple as the first indicator, because Apple is pretty much damn near in its own ETF at this point. All of the rich money, all the big money, all the institutions, they all run to Apple as a safe haven when all else fails. And so Apple is usually one of the last stocks to actually roll over, even in recession or even in a steep pullback. You guys probably noticed that in the last pullback that we had, is that Apple took a long time to fall. Tech did actually as a whole, but Apple was the last behemoth to start crawling over, I should say rolling over. So Tesla is in the process of maybe being added to the S&P, but it should be, because it's huge, it's large, it's a great American company, it's a great American story, and they have just gone up significantly over the past 3 months, like 400%. It's insane. And so Tesla is starting, I don't want to say rolling over, because it's still kind of in that triangular wedge pattern, but there is some pullback. There could potentially be some breakdown down to this level here. If you guys know anything also about me with my videos, I like to do a lot of Fibonacci retracements. They are uncannily accurate. I don't know why they are. It obviously has something to do with self-fulfilling prophecy, and maybe something to also do with the way that the algorithms are programmed, to where within all their complex code, that some of the meat and potatoes of their algorithms are Fibonacci retracements. And if you guys know anything about Fibonacci retracements, you know that these are kind of like magical numbers that are seen a lot just throughout nature as a whole, not even just within the stock market. But Fibonacci numbers are very, very uncannily accurate. And so a lot of traders use those in trading and even investing and where to enter in. And with Tesla right now, as a matter of fact, I think this is a little too high. And we need to bring that down some. Those numbers, yeah, we need to adjust that just a little bit. Where are we at here? Let me try to bring that down. There we go. A little bit better. Okay, yeah, that's actually a lot better. All right, so as you guys can see here, from a nice retracement standpoint, I would like to see. Actually, I'm sorry, guys. I just realized. Let me try this one more time. There we go. So from a retracement, I'm sorry, I had the profit targets added to the top instead of the actual top. So from a retracement standpoint, we've already hit, the initial pullback. Actually, I still have this flipped around, but I'll still keep it here. So we have this initial pullback, which, if it were accurate, would be at the 23.6 range. And for the sake of accuracy, because you want to make sure you have that. There we go. You can do it. I think they said that in Waterboy. And so anyway, for the sake of accuracy, we have the initial pullback, and we're at the first Fibonacci retracement. So if this is going to be a continuation, it's going to hit this level and continue on, or it can pull back to the 38, 50, 61, and so forth. Okay, let's take a look at Amazon. I'm showing you guys these tech stocks because what's happening in tech right now is that tech looks like it's having a nice pullback, and a nice pullback could turn into a nice trend reversal if we are going to re-enter into this, well, actually we are in a recession, but if we're going to start to roll over again, this is definitely how I think it would begin to look. So Amazon was at 33.44. It's now pulled back over 10%. Amazon is a behemoth. We already know how Amazon is an 800-pound gorilla, and it's hitting nicely off that support level, off the 20-day, and now it is actually even down after hours. So drip, drip, drip. So Tesla's pulling back, Amazon is pulling back. We already know what happened with Tesla today, right? Not Tesla, I'm sorry. Netflix. Everyone and their mother just knew that Netflix was going to beat earnings. Well, it didn't. And the reason this is important is because Netflix was almost considered to be a slam dunk for its earnings. And so what happened was that they added over 10.1 million subscribers for the third quarter. What quarter are we in? We're going into the third. Yeah, there we go. I'm getting my quarters mixed up. For the second quarter, they had excellent subscriber count. The institutions, I should say Wall Street, was expecting around 7.5 to 8 million, and they blew that out of the water. But what they didn't do well is they didn't do well in the earnings per share. They missed the earnings per share, and their forward guidance, which is also very important, was just stupid, ridiculously low. So basically, if you guys don't know, the way the stocks work with going up a lot is they're all based on forward guidance. And so institutions look at earnings, they look at the forward guidance of what a company states that they expect to make, and then they make their investments based on that. Well, basically, Netflix came out with the guidance in the call and said that we're not going to do 10 million subscribers next quarter. We're not even going to do 7. We're not going to do 5. We're going to do like 2.5. So everyone kind of got scared and spooked, and Netflix crapped out significantly, actually almost 10% after hours. So with something like Netflix, to be quite honest with you, Netflix is not my cup of tea. I like trading pure tech stocks. That's what I believe in, and I'll live and die with. But if you are a Netflix person and you do want to invest in this stock, I would not invest in Netflix just yet. I think it's too soon. They already have bad earnings today. Typically, there's a month or two roll-up that takes place. So it's going to open up down lower. Maybe it closes green, gets bought up. Who knows? But there'll be some type of green, formation for the next 3 or 4 days or so, and then it'll roll over, and then it'll start selling off some more. Maybe down to the 5s, maybe even 450. Who knows? But I anticipate I would be looking for at least another 10% pullback before I would even consider purchasing Netflix. So somewhere in this support level, the 453 to the 480, somewhere around here, I would maybe entertain this, depending on where we are in terms of an overall total stock market. But from an investing standpoint, I wouldn't invest in it if you're not already in it, at least right now. Okay. Now, from a trading standpoint, I love to purchase off the hourly. So I just feel like the hourly, it takes longer for stocks to hit the hourly, but I find that's where you get the best pullbacks, and that's where you get the most profits, and that's where you save yourself a lot of headache from having to overly trade. And so if you buy off the hourly, yeah, you'd be down here. You probably would have got stopped out here somewhere, but maybe you try to buy the reversal. or if you buy over here, right? Nice bounce off that hourly, you go up. Or if we go over here, it didn't hit that one. But I do think I'm almost certain, I'd be shocked if we didn't, that we're gonna hit this hourly in the next, if not Friday, maybe we'll hit it Sunday evening, once the market's up, or I should say Monday morning, or, sometime around there, but we're gonna hit this hourly. My guess is we might hit this Monday, but whenever we hit this is when I think I'd be buying Netflix for a little pop to make some money. Now, the next stock I'm going to talk to you guys about, I want to call this SPICE. It's not how you pronounce it. I don't know where I got SPICE from. It actually stands for space, and it has nothing to do with spice, but I like to call it SPICE because I think the price action is spicy. And this is Virgin Galactic Holdings, right? Mr. Richard Branson, Mr. Billionaire, the one and only, next to Mr. Elon Musk, right? Has his own thing going on. This is a great company. This is an exciting company. This is also a speculative company. They are legit. They're completely legit. There's nothing fly by night about them. They actually just switched over, transitioned to a new CEO from Disney. They announced that today, which means that was probably in the works for probably 6 months. But today it was made official in public, and the stock responded accordingly, right? So they have an even more, well, I think the CEO before was very legitimate, but they have an even more seasoned CEO. They have the Richard Branson that is backing them with billions of dollars. They have a NASA contract recently to help develop some type of technology, I think it is, or I can't quite remember what it is, but they are definitely not trying to play small games. They are trying to get as legitimized and grow as aggressively as possible. I'm really, really excited to watch. I keep wanting to call it SPICE, Virgin Galactic. If I call it SPICE another 100 times, guys, don't judge me. So I did trade this stock today. I made like $150 off of it. Not a lot of money, but I did also get a little bit too, I don't want to say aggressive, but a little bit too trade happy. I bought it early. I bought it when it was around the 10% mark. I went up here. I saw that it hadn't previously crossed the $21 mark. It blew right through it, hit the 22 mark, which actually, coincidentally enough, was a Fibonacci level. Hint, hint, right? This is a retracement of 30 to 33% one, and hit that Fibonacci retracement and had a hard time going through it, which is what I anticipated. So I was watching this. I saw this kind of going flat. A lot of the times when stocks are trading and they're going to have another leg up, what they'll do a lot of the times is they will trend downward, but the trend line will get tighter and tighter and tighter, and then amateurs will think, oh, okay, it's going to break through the bottom. I did this for years. In reality, the pros and the day traders go, it's going to break up, because that's the way it does. It trades down, it gets tighter, then it pops up. So I was looking for that, and it didn't come into fruition. It doesn't always come into fruition, but you were on the right side of the trade if that's what you were thinking. It had a little breakdown of 21, and I know a lot of the times too what they want to do is, the market makers, they will drop it below the support, get everybody to jump in to try to catch a quick momentum, and they'll go psych, go back up through the support, and then they'll shoot it up. They do that a lot through the SPY, and that didn't take place. I said, okay, I don't know what the hell is going on with the stock today. I don't know if this is just going to be a one-day pump and dump, or if they're going to try to have a continuation, and this is the start of a new trend. I don't know, but I'm out for the day. I've made my money. And so it pretty much stayed flat all day, and then after hours, like around 6 o'clock, it just shoots up from 21.81. So this tells me nothing other than the fact that this stock is going to be in play tomorrow. That's all I know. I don't know if it's going to be a pump in the morning. I don't know if it's going to be go up to $25. I don't know. It's going to be all based on price action and how it moves. But I know that this stock is not going to be trading flat tomorrow. That I can promise you. I will be trading. I can tell you that also. So I'm just going to have to wait and see the price action on it. Now, another thing I wanted to also talk to you guys about as well, a crazy stock that I haven't bought it at all, and I'm just blown away at its growth, is Shopify. Geez, how many people are starting online businesses right now? It must just be everybody in the country, because their growth has just been exponential. Ever since March, it's gone up from $400 to $1,100, so 250%. And then we're now also with tech starting to see a rollover, right? So it was a 1080. I'll just say 1080 for even numbers, or 1070, and it's rolled over. And here we are now that it's right off the moving average, the 20-day. So, this is either a nice little pullback and we're going to have a continuation, or this is going to be the start, maybe have a little pop, and then we have another rollover to another support level. But the fact that we're seeing rollover is a good indication that we might finally start to see a pullback. The only, I should say, a significant pullback. The only thing that concerns me about the markets right now, at least I should say from a bullish standpoint, from a bearish standpoint, is the fact that a lot of this move here with the SPY is really political based. And when I mean political based, I mean obviously it's economically based, from the Fed stepping in and needing to inject stimulation into businesses and the economy. So we know why this is up, but in terms of why it stays up, and that President Trump is obviously running for election again, and no matter what side of the fence you're on with that, if you care, don't care, whatever, he's certainly trying to keep the markets up and propped up to enhance his chances of re-election come September. And so, he prides himself on the stock market, and I think allowing this to not stay propped up, at least until he's, if he's re-elected again, was going to significantly hurt his chances to do so. And that is why I don't think that this is going to fall. I don't think he's going to allow it to. The Federal Reserve, although they said they're going to stop their repos, as of I think a few weeks ago, I should say last week. Repos are just basically the federal funds that they've been allowing banks to transfer between each other on a nightly basis to keep liquidity in the markets. Well, they said they're going to stop that. But they did also. The Fed did also come out and say that they were going to be purchasing bonds from companies that didn't even need the money, such as Apple and Microsoft, and they've done that, like hundreds of billions of dollars of bonds, of 50, 100 billion, something like that. So I have a hard time thinking that the stock market is going to crash while everyone is expecting it. No one expected it here when it crashed. No one expected it in 2008 when it crashed. No one expected it in 2009 when it crashed, and no one even expected it here when it crashed. So I just don't think that stock markets ever crash when expected, and that's why I think that it's going to stay flat. And then maybe we'll get an end of the year, rollover, or maybe we'll get a beginning of the year rollover, 30-40%, and then it'll be time to bounce back again. Who knows? So right now I'm going to be long biased until the elections, or until something significant happens that causes the markets to really roll over. But if you are looking to get some buyback into the markets, tech rolling over is a pretty good indication that we at least have a healthy pullback, if not at least the start of the second leg of the bear market. Now back to the SPY. If you guys take a look here, that's not the SPY. I don't know why it does this. Let's try this again. So back to the SPY. All right, on the daily, again, everyone's looking for this V recovery. We may get it, we may not. If we have a break of this of the 323 level, I'm going to probably go long again with my stop loss right below maybe the 319, 320 or so. And then if it breaks below it, I'll get out, and then I'll go enter in if we have another breakout again through that level. But I just think the way the markets have been acting right now, we're going to probably break through the level in the next couple of days, if not next week, which would be next week, I guess. Hit that 339 level, and then maybe we'll have another rollover to 30-40%. So that's my estimations. That's also my cat in the background, if you guys heard that as well. I'm going to leave that in here. She is a character, to say the least. And that is my analysis, guys. So I really appreciate you watching the video. Hopefully this was beneficial to you guys. This is my technical analysis on the SPY right now. I do encourage you guys to just please be smart. I know that a lot of people right now are very new to the stock market. They're learning the tricks and the trades. They're learning the support levels, the Fibonacci's. They're learning price action, price movement, what the pre-market does, what the aftermarket does. To look for what key pattern. I mean, this is years and years and years of just learning the behavior patterns of the stock market and the market makers and what they're trying to do. Keep in mind that 75-80% of the price action on the stock market of all stocks is actually done through algorithm trades. And these are very complex algorithm trades that are that are created by like 4 or 5 companies. They really are designed to do a lot of fake outs throughout the day. So that's where all this mess is. Just constant herky jerks and off the levels and fake outs and all sorts of things. And so you just have to learn that the price action of a particular stock or of the markets. You have to be comfortable with position sizing to ensure that you're not maxing out or YOLOing. If you're serious about day trading, YOLOing will never work. You have to be right 100% of the time for your entire career, and they have to be right once. Think about that for a second. Like, YOLOing just basically means you're not a day trader, you're a gambler, and you will lose every penny you have. It's a guarantee. It's just how it works, right? So it's like literally going to the blackjack table and saying, I'm going to put $100 and on every hand, and every hand I'm going to keep playing. I'm just going to keep putting my winnings in. Eventually, the dealer's going to win a hand. And so that's why you have to have position sizing, because it's a percentage game, right? If you have good enough position sizing, then you will be able to trade and even have 4, 5, 6, 7 losses, but your one to win will well outdo your losses, and then you can continue to play the game. So I will go into position sizing in another video to talk to you guys and just exactly why that's so important. Institutions understand position sizing, professional day traders understand position sizing, or anyone who's just dibbling, dabbling, or making money in the stock market understands position sizing. I will make a video on that. I will break that down to show you guys averages and why that's so important. But for the sake of the stock market for tomorrow, we're going to keep an eye on it. We're going to take a look and see the price action. I don't actually anticipate us having a lot of price action tomorrow. If anything, we might even get a pullback, a continuation pullback, just because we're in that resistance level. But and then maybe we'll get a follow through tomorrow. But Monday. But if we don't have a pullback tomorrow, then I got to stay long biased until the market shows us otherwise. So thank you guys so much for watching the video. Hopefully this is very beneficial to you. If you are new to the channel, I highly recommend that you first like the video if you've gotten this far. Also, please make sure that you subscribe to the channel. So what we are here at Casey's Castle is we are a hybrid of a number of things. As I'm growing the channel, I'm making different content to see which one everyone gravitates towards and which things are valuable. But they all fall under the same category, and that's stocks, money, investing, and how to save your money, how to make money. And so that encompasses not just the pure monetary aspects, but just also the psychological aspects as well, about why saving is so important, how to make sure that you're not overly spending or doing things that can necessarily hurt your financial future, the importance of compound interest, best credit cards, the best banks, the best brokerage companies, just all those sorts of good things, but also newsworthy things as well. So anything that's in the news that I think you guys may want to know or get more information about, such as the stimulus package that's been going on very recently, I'm going to make videos about those as well. I've gotten a lot of requests on making those videos, and so I'm going to continue to make those until we can get some type of semblance as to what's going on with the stimulus package that a lot of people desperately need. We should have some movement on that next week, hopefully from Congress. So other than that, thank you guys so much for watching the video. Please make sure that you guys like. Make sure you also subscribe to the content if you guys like the channel. And also let me know below what are your expectations for the stock market. Do you guys think that we're going to be going higher here in the next few weeks, or do you expect us to have a little rollover and to see the market start to pull back significantly and to where we can enter in at some lower levels? So thanks for tuning in, and I'll talk to you guys later. Take care.